Good morning, traders. Manny Cabrera from MDC Trading Academy with our pre-market forecast for today, Monday, April the 8th. Let's look at our news items for this week as we begin our new week. Nothing on the docket for today, Monday. We begin with significant news beginning obviously on Wednesday. And on Wednesday, we do have FOMC day minutes. So that's a really important report. Remember, it's always looking at forecasts in reference to the price of money in the United States, meaning interest rates and money supply. The rest of the week is pretty light, other than on Thursday where we have at 8:30 a PPI, which is really important. The rest of the week is pretty light. None of this really affects us here. The rest of this until Friday, which we have the prelim UOM consumer sentiment. Very interesting markets as we've been discussing the last several weeks. As we broke this key area here at 28.66 in resistance. Market has just churned slowly up, slowly. Volume has been pitiful. We didn't have one day last week over a million. Every day was a little shy of a million. And of course, when that happens, that means that our range begins to wane a little bit. So if you notice, these bars are very small in reference to compared to other bars, significant bars. But again, we spoke about the fact that within this area here, we have been here before, and if you notice, we had a very similar kind of movement here. If you notice, very small bars that are not really very convincing, but it's still the same process of runs and retracements, until we made it to the all-time high. It doesn't look like the market is significantly going to do anything different. We do have a lot of room for support here if the market decides to retrace. We have the original resistance area. Probably by that time, the 20 SMA will catch up. Everything looks positive right now, although the volume is low. I said technically we're still expecting the market to continue up. There's nothing technically here telling us otherwise. So, problem is that the market ranges are very tight. Market isn't really moving in any conviction in any direction when it makes its runs. It almost looks like Capper stance recently in the market. So it offers less opportunities. Now you know that markets go through transitions, market go through periods of time that this is how it happens. And as a trader, what you need to learn is to adapt to this type of market, to really be able to move the ball when you can move the ball and not force the market. Once again, market has above our rectangle we had drawn out for weeks. Find support. Market continues to slowly churn. And if you notice, the market is just churning up very slowly, and every single day seems to be something lateral. Look, look at the entire week. The entire week was just like a small oscillating lateral movement. Creates a high, creates a low early, and just stays within there. And that's basically what it did the whole week. Basically, the entire week. That's basically all it did. Other than, of course, when it actually broke through. But everything's just simple consolidations to the upside with very low volume. You've noticed the activity between those two days is also similar in reference to how many bars we have. So that's the kind of market that we have, and with that's the market that we're expecting as well today. The only thing that can potentially change this market is some sort of unexpected news item, something totally out of left field that nobody's expecting or anticipating, and then something like that. But here you go. Here's the market. Just establish an early day low, pre-market an intraday low, establish an intraday high, and basically actually did that pretty late in the day. But look at this activity here, guys. This is not very tradable here. This is just not very tradable here. Market's just not moving. And like I said, this is not typical market behavior. We go through seasons in the market, just like we have seasons in time. Not very friendly markets to trade. Our traders just pulling back on trading. We're just watching the market. We're giving it a certain amount of time before we pull the plug on it. And essentially, it's just not the kind of market that you want to be involved in for the simple reason that it really churns up your emotional capital here. So we're trying to hold on to that. So what are we seeing today in reference to trading today? If you are going to trade this market, once again, not very attractive market. Pretty much between two areas. Uh, right now, to me, market is not attractive till either we break out of this area here or we break lower here. And in order for that to happen, it's going to take quite a bit of volume. In order for that to happen, I mean, this market can take, an hour to get here. It can take another hour to get here. It'll probably take an hour and change in order to do this. So, market volume is key. Remember, market really is what creates the volatility. But right now, personally, and I know for most of our traders here in Trading Academy, particularly our trade desk traders, this isn't attractive. This is just not very attractive. So we're just looking for moves in between here. Anything in between here to me is very low probability. Ranges are really tight. Markets really isn't really respecting anything. It's just kind of moving aimlessly. It really is between these two areas, and basically with no sense of direction. Now it's sort of like a paradox because if you see the market is attempting to go up, but look at the mixed days: up, down, down, up, up, down, within tight ranges with low volume, and that's the kind of turning action that we have here, and that's why it seems like very unattractive market. So that's what we're looking for today. Other than that, really, this kind of day that you give this market maybe an hour, maybe 90 minutes. You really don't see anything moving. It's just go do something else. Wait for better days to come, and they will come. Thank you, and have a great trading week.